NIO stock analysis and price predictions for July. Do you have an interest in finding out more about what's going on with NIO stock or the whole analysis of NIO stock? Everything will be shown here. You're all very welcome to come back to Finance Insights today, where we'll be giving you all the latest information regarding NIO stock. The price of NIO stock's been under significant pressure under the past few months due to the ongoing concerns regarding the company's rate of expansion. As concerns about the company being delisted continue to exist, the stock price has fallen along with the performance of other Chinese companies with operations in the United States. As a direct consequence of this, the current price of NIO shares is $22.95, which is almost 75% lower than its all-time high in 2021. The current price is around 95% more than the level that was reached earlier this year. In comparison to that of other Chinese corporations, the general mood regarding the price of NIO stock has been relatively negative throughout the past several months. As a result of the stock's decline of more than 60%, the company's entire market capitalization has increased to more than $38 billion. Bear markets have formed for several other Chinese stocks and ADRs, including Alibaba, Xpeng, Li Auto, and Baidu, amongst others. There are four primary explanations for this phenomenon. First, there is concern that the administration of Joe Biden will remove the majority of Chinese stocks from trading on American exchanges. Second, while the shortage of chips continues, there are concerns about a potential slowdown in the growth of the auto market. Third, there is more rivalry in the electric vehicle business, which has led to a decrease in the price of NIO shares. Companies such as Lucid, Rivian, and Ford have all begun selling their electric vehicles quite recently. In conclusion, the actions taken by the Federal Reserve have resulted in a negative impact being felt by the majority of growth stocks. Since reaching its all-time high, the NASDAQ 100 index has experienced a fall that is greater than 15%. Concerns have also been raised over the current valuation of the corporation. According to NIO Stock News, even after disclosing some significant new developments, the price of NIO shares has been going down recently. First, NIO reported a successful month of delivery in December, despite the ongoing chip shortage. In December, the company recorded sales of 10,489 automobiles, representing a rise of around 50%. In addition, the company sold 25,034 automobiles during the last quarter of 2021 and 91,429 throughout the entire year. For a company that only started producing goods a little under 2 years ago, this is an impressive rate of growth. The robust trend carried over into January when the company recorded sales of 9,652 automobiles, representing year-on-year growth of 33.6%. Additionally, the company started working on its first brand, which would be sold on the Norwegian market and named Aspen. While the COVID lockdowns persisted, NIO reported that it had delivered more than 5,074 cars throughout April. The second piece of NIO-related news was that the company just begun operations in the insurance brokerage market with an initial capital investment of approximately $8 million. NIO has finally announced its entry into the American market. The company plans to establish a plant in this country. Its primary objective is to secure a significant share of the enormous American market, which accounts for the annual purchase of more than 14 million new vehicles. NIO has continued to diversify its listing options by entering the stock market in Singapore for the first time. But the question is, will NIO stock go up? The price of NIO stock might go up in the future months as a result of several important factors. First, the corporation holds a significant portion of the market in China, which is the largest EV market in the world. Even if there is more competition, the company's dominant position in the manufacturing industry ensures that it will continue to be successful. Second, as evidenced by Tesla's success, a strong brand name is an indispensable component of any electric vehicle company. The fact that NIO's brand recognition in China is second only to that of Tesla is a significant benefit for the company. The fact that NIO was granted a license to operate in Europe in 2021 is another factor that may contribute to the possibility of price recovery for NIO shares. This indicates that the company would soon begin selling automobiles to the countries of Europe, which are significant players in the electric vehicle sector. To analyze the NIO share price, the daily data reveals that the price of NIO stock reached an all-time low of $12.45 during this year. After forming a double bottom pattern, it has now reversed its previous direction. It's now located in the chin position of the double bottom design. It has climbed above both the 25-day and the 50-day moving averages, while at the same time the stochastic oscillator pattern has gone over the level that indicates it is overbought. As a result, a positive scenario is anticipated for the NIO share price at this juncture, with the next significant level of resistance being set around $30. The bullish view will be rendered invalid if the price of the asset falls below the crucial support level of $20. Price projections for NIO stock for the year 2022 mark the beginning of a significant reset for electric automobiles. The majority of them, including Tesla, have suffered a decline in their share values of more than 10%. Regarding the current price of NIO stock, analysts have a variety of opinions. According to information provided by MarketBeat, the average price objective for the stock is $57, which is significantly higher than the stock's current price of $24. 86 Research, Macquarie, HSBC, Deutsche Bank, Mizuho, and Citigroup are among the financial institutions that have analysts who have an optimistic outlook of the price of NIO stock. One more comprehensive look, this time by the majority of analysts, reveals that the majority of them are bullish on the company. In addition, information that was produced by TipRanks indicates that the target price for the stock is $59, which is also higher than the present level. While this is going on, Long Forecast predicts that the price of NIO stock will stay within a rather narrow range over the next few months. They anticipate that the share price will be lower than $30 by the end of 2022. Is it a good idea to buy NIO stock and hold it? Even if NIO is an excellent firm, investing in it is extremely dangerous. Because it is a Chinese corporation, there are questions regarding the reliability of its financial results. In the past, we've observed Chinese businesses publishing erroneous data. Another thing that could go wrong is that the corporation might get delisted in the United States. Should something like this occur, a significant number of American investors will be left holding the bag. The number of shares that are held by short sellers is referred to as short interest. People who wager that the price of a stock will decrease are known as bears. Following the events that occurred with Wall Street Bets, we have witnessed a decrease in the short interest of several different firms. NIO short interest has dropped to its lowest level in more than a year, standing at just $1.5 billion at the moment. When it was at its highest point, the value of the shares held by short sellers was greater than $4 billion. How many automobiles have been sold by NIO? NIO is a relatively new company that is now in the process of increasing its production capacity. For a firm of its age, NIO has managed to sell over 160,000 automobiles, which is an impressive quantity. In the next 5 years, industry analysts anticipate that the company will sell more than 500,000 automobiles annually. Is there an excessive price tag on NIO stock? Well, NIO is currently overvalued, just like the majority of other electric vehicle stocks. In addition to this, the company generates annual revenue of less than $4 billion, yet it is valued at roughly $35 billion, even though it operates at a loss. The price-to-sales ratio of the company is 5.89, which indicates that it is pricey. However, if the company continues its expansion, then this seemingly excessive price might be appropriate. The value of a share of NIO stock has increased steadily over the past few years. We have explained why it has performed in such a manner on this video. In addition to this, we've identified potential dangers that the organization is currently confronted with. We hope you enjoyed today's video, and please understand that we are not endorsing any particular stock. Rather, it is intended solely for educational purposes. If you found this content to be educational, please be sure to give the video a thumbs up and subscribe to our channel. Otherwise, we won't see you again until the next video. Hey, thanks for watching, and have a great day.